Let's get to our final trading tip of the day. Joining me now is someone that you see here quite often, Scott Bauer, the CEO of Prosper Trading Academy. You're a veteran trader. You traded on this trading floor.
Sure did, for a long time.
You've seen it all, right?
Seen a lot. Definitely seen a lot, yes.
So what's your top tip when trading?
So number one, and it's an age-old adage, and everybody I teach gets sick of me saying it, but bulls and bears prosper, pigs go to the slaughter. What does that mean? It means you can be bullish and make money. You can be bearish and make money. But if you try and take too much, if you try and just get, a little bit extra here, a little bit extra there, and not manage risk, pigs go to the slaughter. You just take what the market's giving you, move on.
Because people, I think, tend to get really hyped up on a trade. Oh, I really think the S&P is going to drop here. And they become too emotional and they overplay the hand.
The emotional side of trading is something that successful traders have learned to actually throw out the window, because that's what gets people into trouble.
You like to keep green on the screen.
Love keeping green on the screen.
So how do you sleep at night?
Well, one of the best ways to do that is when volatility in the marketplace gets inexpensive and it gets cheaper, like we saw, sometime earlier in the year, and actually back a year ago, early in 2018, before the February meltdown. That's a wonderful time to buy protection, buy insurance, whether it's through buying some upside calls in the VIX or buying some S&P puts. Why not buy insurance, right? We all buy insurance for our car, for our home, personal articles, this, that, and the other. We always want the best deal that's out there. We want to pay as little as possible. Well, those opportunities are out there, and when volatility in the marketplace gets cheaper, great time to buy insurance to protect and hedge your overall portfolio. When it gets down again to the lower teens, 11, 12, 13, that's a place you want to buy it. Just like on the opposite side, Angie, when things in the market get a little, unraveled and there's a lot of tension, and you see the VIX really getting higher in the 20s or even approaching 30, same signal there. That's a reason to sell it.
How do you go about stock picking?
How do I go about stock picking? Very carefully. No, I actually look individually, meaning I don't look at a particular sector. I'm not going to look at tech sector as a whole. I'm not going to look at financials at a whole. I'm going to look at individual stocks, usually best in class within a particular sector. So let's say if I'm looking at financials, I'm looking at a JP Morgan, a Goldman Sachs. If I'm looking at tech sector, I'm going to look at an Apple, an Amazon, maybe a Nvidia, something like that. And what I'm going to do is I'm a very technical trader. So I look for moving averages. I look for 50 and 200-day moving averages, both on the downside and upside. I also look, one big trigger for me is volume. I want to look to see where has there been a lot of volume accumulated in a particular stock, and that helps me make a decision as well.
Well, thank you for helping us out today.
My pleasure.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.